You are now about to be privy to the time frame pairs that take you from para to gara. You're going to come as a beginner and leave as a winner. One of the most prevalent charts I use to gauge my points of interest is the daily and the 4-hour time frame. The reason for this is simply a daily imbalance that aligns with my theory and my fundamental bias should never be brushed aside without a reaction. I repeat, never be brushed aside without a reaction. So already by combining fundamentals with higher time frame imbalances and pairs, I'm not chasing trades. I'm manufacturing a setup. Now, to further refine the angles of that trade, there are a few tools you can use. The Fibonacci tool, for example, is useful to gauge where retracement could realistically occur. But refinement doesn't always mean indicators. Sometimes it's just inference backed by proven data. And when I say inference, I don't mean guessing. I mean using psychological levels, previous liquidity draws, prior highs and lows, for example. Just areas where price has already proven it reacts. This brings me to the point of further accuracy, the 15-minute and 1-hour coalition, as I like to call it. Now, this relationship is a beautiful thing. Maths, it's embedded deeply in trading, so why not use it? We know that each 15-minute candle is a quarter of an hourly candle. That alone gives us multiple tactical advantages. One of the most important concepts here is that the opening of an hourly candle represents the bias of that candle. If your directional bias is correct, then the opening 15-minute candle of the hour can present an elite entry opportunity. Now think about this. A wick on the hourly time frame could simply be the rejection you need on the 15-minute to enter the market safely. Let's put it in layman's terms. An hourly candle, it doesn't want to print its intention blatantly, otherwise there'd be no liquidity. Price needs participation. So if a lower time frame like the 15-minute respects a key level and the following 15-minute candle engulfs the previous one, then within those first 30 minutes, we already have an insight into how the hourly candle is likely to close. That leaves us with the remaining 30 minutes to execute, not react. You're no longer late. You're early, but yet informed. When you combine higher time frame imbalances, fundamental bias, and lower time frame execution, you remove randomness from trading. The daily and the 4-hour give you where price should react. The 1-hour gives you direction, and the 15-minute gives you precision. Trading isn't about predicting, it's about aligning with probability. And when timeframes speak the same language, the market makes its intentions very clear. And I'd be a hypocrite, guys, if I just gave you all that theory without the practical. So I'm not going to talk off your ears too much. We're going to get right into this. And if you want a more in-depth description and tutorial, then you'll need to just go ahead and look at our other videos. So now, we're going to come to the markets at this point where we've seen this candle close as liquidity, failing to close outside of this previous Asian session. So going back, what do we see? We see a huge break of structure here, closed below, taken this low, and then we see change of character to the upside where we sold off. So what does this mean for us? I would be saying, okay, my bias is bearish, but I've missed my entry. We should have been entering from here. We've missed it. So what do we do now? This is all on the 1-hour, guys. So think back to what I just said, the 1-hour, 15-minute pairing. We are going to say, all right, there is areas where we should fundamentally get a retrace. So if we mark this out, we can mark out an area from here to here, really, with also an Asian session here, Asian session high, sorry. Cool, so we've marked out what we see. Now we're going to go down to the 15-minute and we're going to see if we could have gotten an entry. I'm going to use my fundamental ideas to say price shouldn't be willing to go back and take this high if we are actually bearish. There's a low that it could respect. It could respect this low here, which is also the break of structure to the downside. So we should say, okay, so price should be rejecting off of this point or somewhere around this point. But also with this break of structure to the downside where the liquidity was taken, we also do see a new range has now been formed. So we can draw out our fib and we can say price should be giving us an entry, at the golden pocket, which is here. So you see how I've manufactured a trade setup just using the fundamentals and using the pairings. So what should we do from here? We're going to execute. We would like to execute in the golden pocket with our stop loss being set at this level that we previously said was the Asian session high. And what can we target? We can also target the session low. And what happens? It hits perfectly. And now here's an example for the 4-hour and 1-hour coalition or pairing. It's anything, doesn't really matter. So what we do have here is an intraday range, but on a 4-hour. And the fib that I have aligned with is just a high to the low, as you can see. And why is this my fib? It's because on the 4-hour, we can see a low here was formed, and we're not counting any wicks, it's just a body. And a high here was formed. Again, not counting any wicks, just a body. So this is the range I'm dealing with. And it's this range because I am bullish. You can see that no low was taken, liquidity was taken, and we rallied higher, broke these highs here. So yes, I'm bullish, that's my bias, and this is my range. Okay, now that we have this established, we also need to establish that imbalances, psych levels, anything that's on a higher time frame is way more important. And that's where you should be looking in order to create the beginning builder blocks to your trade. So now that we have this and we've established that this is our range, we need to now analyze our range. What do we see here? We see that price overtook this high and was stopped, and now it is gaining more liquidity in order to carry on. Price didn't tap our 50%, but it did close above, meaning price is rearing to go. So if we know that price is rearing to go on a higher time frame, then it means it's likely, very likely, to continue bullish on the higher time frame. So that means that we are going to get more upside at a faster rate rather than if we were on the 15-minute and we're seeing this exact same PA. Does that make sense? And now, you may be asking, what's the importance of this to get in our trade? The understanding is what makes the trade, not the execution. So if we're seeing this on the 4-hour, we now want to be saying, where should we be executing? And this is where it comes down to on the 1-hour. Alright guys, so this is just the same PA from the 4-hour translated to the 1-hour. And I'm going to give you guys an analogy. Let's say we're reading a text in English and we also have that same very text in Spanish. Sure, it will mean the same thing, the translation. However, the words are not directly translated because we have some words in English that we don't have in Spanish and vice versa. So this is what you're seeing here. It's just another way of reading the same PA. So what do we have here? We have a 50% tap, but it's also important that this is the tap that actually started this movement of PA. Now, this is the tap that respected the 50% that was on the 4-hour. It was a good buy to buy from here. However, there's not really much to go off apart from this psych level here and this psych level here. You could try and buy it off the 50%. However, as you can see, it didn't touch here. So now we're thinking, okay, we know we're bullish and whatnot from the 4 hour. And 4 hour has told us that already. So where should we buy from after seeing this point? Now, I can see one spot right here that is important. This gap here where a lot of buyers came into the market. And it's a lot of buyers, we know that how, because the next candle printed had a huge jump. So if price can come back here, we are likely to see more buyers filled. And why is this also a good and protected spot? Because we do have an area of liquidity that price should not touch if we are still maintaining our bullish structure. So knowing this, we can now scale down into the 15 minutes, the 30 minutes, etc. and try and execute. Right now, we are still planning. So let's just continue this PA and see what we get. So we see that's almost a perfect close in. It wicks below, but it's a perfect close in, showing that we are still respecting these levels, these important levels that are translating on higher time frames, the 1 hours, the 4 hours, etc. And this is something that I preach to anyone who will listen. My traders, my friends, my students. You need to learn the patterns of the market to be successful. It's like a book. You need to know what you're reading, not just read, but actually understand and download the knowledge. Let's say you missed this entry with a TP at the top, stops at below. What do we see here? We see this low that was swept. So we can tell, okay, we're coming lower. What is my next point of entry? Because we've already mitigated this point here, this gap and this candle here, our last piece of imbalance, our last demand that we have is here. And why is this so important to us? Because as we established before, price shouldn't be taking this wick if we're still bullish. It can tap it, it can mitigate it, whatever, but it should not be taking this wick here. So, knowing that, what do? We can say, yeah, this is a good entry. Our second confluence, we see price respected this before and rallied above. So it should seek it for more liquidity. What happens here? It fully mitigates it, which is perfect. This is where we want to be. If you want to be meticulous about it, we can draw out our fib. We can see where we would want to be entering. If you enter at 50%, 26, that's all right. If you enter here, that's all right. You can enter at the bottom, that's still all right. And what do? We can target this previous high, gets taken. But if it gets taken and we still see this, what is this? One shoulder, two shoulder, and a head. What does that signify for us on a higher time frame? More upside. So we could target this next, or even that. It's completely up to you guys. I'm just giving you the tools that you need and the tools that you can use to be successful.